Welcome back. Welcome back. I know it's been a long time coming. I know we haven't done it in a month now, but this month we take one vacation and everything has gone to the
Absolutely.
ground apparently. Yeah.
Everything's gone to zero.
Yeah.
Well,
That's what
that's how you
happens.
know.
Yeah.
Never again.
But
See.
up only from here.
Yeah. No, seriously. But the
Yeah.
thing is, like, that's how you know we can never not do it, even if for 1 week, because like we're gonna crash the markets, and this you can't do that to everybody. Even if like we only get one viewer, can't do that. It's not fair.
Yeah, we
But
crushed the markets, guys. We just decided to stop live streaming for about a month, and the markets fell right with it.
yeah, but all
It
right,
be like
this
that.
is it. Do be like that. It is what it is. But yeah, let's just get right into it. Let's just review what was washed out, because it was it
Yeah.
was it was it was gonna happen. I mean, we've mentioned this. This is, what is this, weekly crypto market recap number 20, and we've mentioned it at least. This is the 20th time that we need to wash out the garbage, and this is just comes with it. And so lending was just another BlockFi. It was just another, borrowing and lending platform that was centralized. And yeah, you could think that you could have your money in there and you're safe. They were even offering like mortgages. So imagine you had like
Oof.
a, like, yeah, big oof. So like, yeah, I feel for the, anybody that had funds in so lending. But like, yeah, that them having their funds on FTX just shows that they just didn't really know what they were doing, just as a lot of others. Like, why would you have your clients' assets on another centralized entity? Like, that's adding more risk. I mean,
Right.
wouldn't it have been just easier to just set up a ledger and just hold it there? Yeah, of course. Yeah, they wanted the yield, but like, and look what happened.
If it's
Yeah.
not your keys, it's not your crypto, you know? I
Exactly.
mean, any kind of centralized exchange, you use it as a utility. You don't really keep your money on there. It's like an airport exchange, right? So sometimes in airports like Dubai, you can go up to a kiosk, you can swap dollars for euros or euros for rupees, and you get that money back, but you don't keep that money at that kiosk. You take it with you, you know? And just having that custodial function available on a centralized exchange is an unprecedented risk that a lot of people don't realize until situations like this happen. And I think a lot of people from this crash learned a very valuable lesson in the fact that if it's not your keys, it isn't your crypto.
Yeah, I think it's a pretty expensive lesson to learn. I think the not to dwell on this too long because everyone has already heard about FTX in the last month for
Yeah.
uh,
Yeah.
over and over again. But like the sad thing is that this was one of the most trusted exchanges. But I think one of the more important things in relation also to lenders and things like that is that you have to ask yourself kind of how much is it worth it, like if you're getting, let's say, 30% interest on whatever it is, whether it's stables or if it's tokens or whatever, then it's pretty much guaranteed to fail in the long run because you cannot give out like 30% interest and have that
Yeah.
be sustainable. But then on the other hand, if it's only like let's say 5% or less, then it becomes the question, because then it is like relatively comparable to something like bonds, and then it becomes the question of like, yeah, do I really trust my money more in this smart contract for maybe a percent more, or would I just rather go the more traditional way? And I'm pretty sure I will not get just randomly rocked or like rocked by some Bahamas exchange or whatever in the process, and I will
Right.
never see my money again. So yeah, it sucks a bit, but I've become way more wary of like yield farming and lending out my
Right.
crypto whatsoever.
Yeah. Well, it
No,
also
great.
brings into a really important point that there is a need for a proof of reserves for any
Yep.
sort of
Yep.
exchange there is. Because if you
Exactly.
don't have any proof of reserves, and a lot of centralized exchanges are having trouble proving that they have the reserves necessary to facilitate the business that they have, how would that affect the trust in the public space for just the average Joe to put their money in with your exchange? That's a very big leap of trust that you have to take if you don't have that kind of proof. Whereas
Yeah.
if you do
Yeah.
have that kind of proof, which Chainlink is seeking to provide, you could have better ease of mind when you hold your money with an exchange.
Yeah. Yeah, I think Chainlink proof of reserve is interesting. I think they mainly developed it more for like stablecoin usages, or like something like Pax Gold, where it's like, yeah, we have
Exactly.
this
Yeah,
much gold in reserve that backs this sort of gold, um, almost like an IOU on chain, right?
right,
Where I think sort of Binance and the rest of the exchanges that now all of a sudden implement proof of reserve sort of miss the mark, except for BitMEX, as far as I know. That's so far been the only one that I've seen do it correctly. Is pretty much all of them only post proof of reserves, which is at least useful to some degree, right? Because all right, they at least have like customer deposits, but it is
right,
not as useful as it would be when you also add some sort of proof of liabilities. And that's what I was saying. Um, what I like about what I saw from Bitmax, that they also posted basically just, yeah, their balance sheet, I guess you could say, where they post both their assets and their liabilities, and then you can make a more informed decision about, like, are they actually uh, gonna take my money if they're in a bankruptcy somehow or not? Because now we know, I think the reserves from Binance were something like 69 billion, which is of course a huge number, but we don't know
right.
what the liabilities are. So, like,
Wait, you
is
said 69, sixty
yeah,
nine billion?
yeah, something like
Yep.
that. I'm pretty
I don't
sure.
trust
Yeah,
it. I don't
yeah,
trust that.
yeah. It is. It is a funny coincidence, but I mean, the sort of meme number aside, yeah, we don't know what the liabilities are. Are the liabilities 10 billion? Are they 50 billion? Are
Exactly.
they
Yeah.
70
Yep.
billion? So yeah, it's nice that they have at least a proof of reserves, but I don't know how like Binance terms of services are, but I remember pretty clearly. I think it was a few months back, like 2 3 months back. There was a little bit of a scandal with Coinbase, where I guess they had updated their sort of terms of service, and it said something along the lines of basically your assets could be taken in case of like a bankruptcy. Um, so if that's the policy for, I'm assuming, most major exchanges, that is of course like quite an assumption to make, but let's assume for a second that most exchanges are run pretty similarly, then without proof of liabilities, you're still not really clear on what you as a user can lay claim to, you know?
Yeah, it's only showing one side of the picture.
Yeah,
Like, yeah, you could say like, okay, we may have these assets, but if if your liabilities is the same amount of the assets, then it's like you have $0. But like,
Yeah.
exactly. Exactly. Yeah.
there's like no way to know, So it's like,
Yeah.
yeah, we need proof of reserves. Like, it's Chainlink is definitely the go-to for this, and it's like it's not about proof of reserves like how you were mentioning it. It's about having it in a way where it shows both sides of the picture, where like people don't have to stress like, okay, do they have liabilities that cancel out the assets, or are they in underwater negative? And that would be even worse. Like, there's just no way to figure that out unless we have this in place. And like, if we have it everywhere, the better. because then like it
Yeah.
just becomes the standard, it becomes a norm to just like demand that as an investor, as a user of these different platforms to begin with.
Yeah.
Yeah, I have 2 points to add on to that. I mean, you can really take the concept of proof of reserves and expand it to not only centralized exchanges, but to other businesses and other
Yeah.
industries as well. I mean, imagine any sort of top 100 company in any country having that kind of proof of reserves available. That would increase the legitimacy in the public eye, or to anyone who's really looking to invest or buy stock into that company. And it would be a very smart move to implement something like that to show, hey, we have what we say that we have, and we can facilitate the business that we say that we do.
Right,
And
right.
yeah, I mean, it really provides a new angle of security for the average investor, and that's really good. Another point that I want to make with these centralized exchanges is that, do any of these centralized exchanges have a game plan in case if something like that happens, or an FTX situation happens to them, where they have outstanding debt and they don't have assets to back it up? How they be able to repay their users, or how they be able to compensate their users if they don't have anything left, and without any kind of bankruptcy filing or lawsuit filing to try to recover any of those funds. Because right now we're looking at it, but this is pretty much the first one of its kind outside of Celsius and the others going under earlier.
I
But
mean, just to quickly add on to that, it's kind of ironic, but also very funny that one of the comments made by Do Kwon was something like, "Yeah, if Terra fails, um, we will take the entirety of crypto down with it," something like that. And pretty much
Right.
all the bankruptcies across the board are still from the Terra fallout. To be honest, like
Yeah.
this
yeah,
was also. I mean, you can't say for sure, but like if Terra never collapsed, then there I think there would be a pretty good chance Alameda and FTX and like all the other ones, Celsius, like you mentioned, and whatever other ones would still be standing.
Yeah.
right. And
100%.
$3 trillion wouldn't be erased from the entire market at the moment. I mean,
Well, it,
crypto's lost a
I don't
lot
know.
in their market cap, but at the same time,
Yeah.
the utility is still there, and it's not like it can't rebound. I mean, this is basically ground level, or rock bottom, right?
Yep.
The only direction that we can go from
Let's
here is
hope
up
so.
with yeah, let's hope. But with more utility being developed and more technology being utilized and new innovations being applied to the industry, that's helping the recovery process bounce back considerably faster than any other industry. And that does have to be taken into account.
Yeah,
Yeah.
and I think also this is quite a cynical take, but I think with all the shit that's going on in the world, and like people becoming more and more lonelier and things like that, and also the wealth inequality becoming bigger and bigger, there will still, every new cycle, there will still be people who want to gamble to get a better life. And I mean,
Of course.
while I will be the first to say that I don't think gambling should be like the main purpose of crypto, if we're being honest, up until now, that still has been the main purpose of crypto.
No, it is.
Basically, just
Yeah.
kind of unregulated casinos. And yeah, I think that speculation will still drive us forward, and that's both good and bad. I mean, the bad is
Mhm.
kind of obvious in my opinion, but I think it will also um, fuel like innovation and development, because you cannot really argue that what we've seen this last cycle was exactly the same as the previous one. I mean, we've got
Right.
DeFi and like NFTs,
Exactly.
so
Exactly.
I mean,
that's all here to stay. Even if prices are down, that's here to stay.
yeah. And to
Yeah.
expand on that point, it isn't like literal casinos that you're referring to with people gambling their money away. It's rather people buying into a speculative bubble on specific projects and then providing volatile liquidity to these speculative projects. And it's expecting only one result, which is either line go up or line go down, depending on if they're doing like a futures trading account or if they're just doing spot trading. But the end result is they want to have more money than what they started with. And some people that are investing into cryptocurrency are from developing countries. They could be in desperate financial situations, and they're just trying to throw one Hail Mary to try to make it all work.
Yep.
And it, a lot of different situations, but the bottom line is that a lot of people, regardless of nationality, etc., they participate in this volatile liquid inside the market, and it provides a ton of money for people to actually develop projects with, which it's a double-edged sword, because you have these kind of people, buying in for the speculative value, where that could overinflate the actual real utility value of the project. And until that market is corrected, it could go left, or it could be left unchecked until it does. And then you'd see a very sharp drop to where its actual valuation really is. And yeah, it is a problem that has been, affecting the crypto industry for years now. And it's probably going to be something that persists for the next few years.
Oh, yeah.
But definitely, it is a very unspoken aspect of the industry.
Yeah.
And the thing is, it's so much, way so much. Like there's so much more to what crypto is as a whole than just like what these exchanges are offering. Like, yeah, you could speculate, you could trade back and forth into different crypto projects, and you could leverage, or you can try to yield farm. But the thing is, at the end of the day, like, these are tools, and you could potentially go on chain and utilize some of these various tools in different ways, and you can create strategies where then you can start accruing wealth, right? And then, like, it's not even like in a sense of like gambling at that point. No, you're actually taking calculated like bets, because you understand like how these different tools work, and you see how you could be able to leverage them in various ways. Like, NFTs are being sold for like a picture of a monkey, right? But like they represent like ownership rights, and you could use that in various ways where you could definitely like start producing wealth that way. And like the same
Yeah.
thing with tokens, like, yeah, like it highlights pretty much what you were saying, Gunnar, and you like Icarus is pretty much going over like the idea of like, and some of these bets are just like too speculative, and the utility is not there at all. And even like the structure of the token and how the token is being utilized within the project or network, like it's not like being reflected in the value of the token. Like, you can see it firsthand with Uniswap, essentially, where like you could see how like the token is only used for governance, and like its market
Yeah.
cap is like what, like
It's a complete meme.
billions.
Yeah.
Like, it's
Yep.
a joke, and like it's the most used decentralized exchange, right? But like we have no real governance, even if you do hold the token, because at the end of the day, the team more than likely has a larger majority than most, so they can sway votes in whichever way they feel like it, and they have the technical resources to be able to just steer the project in whichever way they feel like it. It's a joke. Like, there's so many things that just needs to be fleshed out within this industry. But like, I'm happy that this is happening now. I'm happy because like it redirects this liquidity to the projects that is actually producing real value and actually producing real utility. Like, not just for like people to speculate on. It's just to be able to do so much various things. Like, come on now, like it's insane. Like, even just the idea of Ethereum, the idea of chain, like even the idea of Bitcoin. Like, so many people, it goes over their heads. They're just focused on number go up and down. It's pretty crazy.
Yeah.
Yeah. I mean, I still do think a lot is way overvalued.
Oh yeah,
Based just
For
just
sure.
based on like how much revenue they're generating, right?
yeah,
I mean, for a whole lot of projects, it's not that much, and like there's not really that much utility, like you already said, with Uniswap. But maybe a sort of not so smooth segue into more revenue is like Chainlink staking is coming up in, I believe, like a week or so. I think the 6th of December. So yeah, I'm curious to hear your thoughts, because obviously it's been a long time coming. To the credit of the Chainlink team, like usually when
yeah.
they release something, it's done well, and it's not like the sort of shitty half-baked product that has bugs on every side. But uh, as far as I know, like you have to lock up your tokens for staking version 0.0 or 0.1, sorry, and those will not be available until um, version 1.0 comes out. And I believe the
Right.
estimates for that are like another
1 year.
1 or 2 years.
Yeah.
And then also the sort of interesting thing is that their Chainlink build program, where stakers would receive, or no, let me rephrase that, where node operators would receive part of the tokens that a project can allocate to Chainlink in return for like help with Chainlink infrastructure. Basically, they're giving up a portion of their token supply to get financial and like technical support from Chainlink, I'm assuming.
Yeah.
But
Yeah.
the wording in that is so that it's like and stakers may be eligible to receive these rewards in a future version of staking. So for version 0.1, like most likely you're not even going to see these build rewards.
Oh
So
my
it's
goodness.
like, yeah, you're locking up your tokens for an undetermined amount of time, in which Chainlink might rally or might not rally.
That
And
goes into
then,
another kind of forms with staking too, like with Ethereum, because haven't they removed
Exactly.
their
Exactly.
devesting schedule? Like you can't get your coins off of the staking platform
yep,
if you had started to stake them, which that's really concerning. Just from a perspective of, you have a lot of really top projects. Chainlink is a top 50, I believe, still, and Ethereum is number 2
yeah,
still.
yeah,
And you have projects as big as they are, and with market caps as big as they have, and they're not allowing people to withdraw their liquidity, and
yep.
it doesn't prove well in that aspect. Just from a historical standpoint and what we've seen so far from the past year, if they're already making moves like this, don't
I
want to be a
mean,
concerned shill, but it's something to keep in mind.
yeah, I mean, to be fair, I do think, like for Ethereum, there are already liquid staking services. Um, so it's not entirely like you cannot find a way to stake and still sort of get your liquidity at times when you need it. And that's also the next point I wanted to get to. I think that could prove pretty interesting for Linkpool, because
Yep.
they'll
Well,
also provide
yeah.
liquid staking, but then for Chainlink, amongst
Yeah.
others. I believe they're also working on Ethereum staking, but for now, let's focus on the Chainlink part.
Mhm.
Because I don't know, I feel like a lot of like old link holders are still somewhat hesitant about staking their entire stack, because, or even part of it, because even if you believe in it, um, then still, what do you do if, let's say, Chainlink runs in the next 2 years, and you
Yeah.
cannot unstake anything to sell at least a portion, so you can make some gains, because I think there have been a lot of people who've been pretty hurt by the didn't read never selling meme of
Yeah.
Chainlink,
Yeah.
and held all the way up to 50 and then all the way down to 50, to like where we are now, like 728.
Yeah.
dollars. So I mean, I think a lot of people learned from that. Like, yeah, maybe it's not so bad to sell at least, like, I don't know, 10%, 20%, if you're massively up, because that could be a very big difference, depending on how big your stack is, of course. Um,
I mean,
but yeah,
another really valuable lesson is to never get married to your bags.
yeah,
You
100%,
know,
exactly, yeah,
always
yeah,
cover your initial investment no matter what,
yeah,
and the rest you can just do whatever with. Not
yeah.
financial advice, but you know.
I mean, honestly, I think that's pretty sound financial advice to
Oh,
get at
definitely.
Yeah, no.
least your initial investment out. Um, yeah, I mean, I think I think we all have made some mistakes in the last cycle that we could learn from, and that's definitely been something I wish I'd done more. Take more profits. I mean, yeah, that's definitely a lesson for next cycle. And I think as well, just like less Ponzi's, in the sense that what I think is a pretty interesting way of thinking about it, like a bull market, it's pretty easy to think like, why buy Ethereum or let's say Bitcoin when I could buy, let's say, XYZ altcoin that
Hmm.
could potentially do 5 or 10 times as well as Ethereum, But to be fair, in the long run, it's pretty hard to outperform Ethereum, and the same goes to a lesser extent for Bitcoin, I would say. But yeah, it's
I
I
mean, a really
think
good example of that would be Sheeb and how that mooned,
yeah,
and a lot of people got like 50x their money or some insane
yeah,
amount, but that
yeah,
only lasted for like maybe a couple of days up to a week tops, and then it
yeah.
went right back down.
Yeah, exactly. And then I think the sort of bear mentality, which is a bit more prudent, is like, why would I buy this random sort of uh, shitcoin or altcoin, whatever you want to call it? That's a huge gamble, or not all altcoins are a huge gamble, at least in my opinion. But when I could also buy, let's say, Ethereum or Bitcoin, like personally,
Yeah.
I think
Yeah.
Ethereum is better risk adjusted than Bitcoin. But yeah, like, I think honestly anything in let's say the top 50, or not, maybe not anything, but a lot of the things in the top 50 will probably see some gains in the future cycle, which is a very, now that I say it, I know it sounds actually pretty risky because a lot of things have done horrible in a future cycle that were
Yeah.
doing pretty well in previous cycles. But like, if you know a little bit how to pick them, I think they can do well. But in the bull market, I was buying stuff that was like number 500 on CoinGecko, and then
Yeah.
now that you think about it, like in a bear market, you wouldn't even think about doing
Oh
something
yeah,
like that, because
definitely.
it's just gambling, to be honest. Like, the only upside of gambling is that you at least know more quickly that you've lost all your money, and here you're just bag holding and bag holding and bag holding and hoping that it ever goes up again.
Yeah.
um
Yeah.
but yeah, I don't know.
Thing is, like the way that Ethereum structured it, where like you could essentially stake Ethereum. Like people didn't think that a year later, like you know, they would have the merge.
Yep.
People didn't really think that. And so
Right.
who knows? I mean, yeah, the 1 year, 2 year,
I
it can.
remember I remember people saying in June, like, yeah, but Ethereum staking, I mean, they've been
Right,
saying
right,
that for years. Is that actually going to happen? And then, yeah, it did actually happen. I mean,
exactly.
yeah,
Maybe not the
so,
full extent. Maybe they still haven't been able to withdraw, but yeah,
but that
like
was
they
never that was never part of the promise of
exactly.
Yeah.
staking.
it was just a merge happening. And that's the same
Yeah,
thing
yeah,
with like Chainlink right now, where like they have their like the whatever they're gonna offer right now for staking, but like it's still not the full iteration of what staking actually really is. And a lot of members have like a lot of Link Marines have already mentioned that this isn't the real staking.
yeah.
And like yeah, if you lock it for a period of time, but I believe even if you do it with Link Pool, it will be locked for a period of time. Then yeah, like I
Mm,
see a year, 2 year, it would just be like something coming out where like it's a big enough update. Maybe it's CCIP. Maybe that's what's gonna happen in the first year, and maybe some other things that really start, bootstrapping the entire network, where like they could fully launch the full iteration of what staking is. So then people are actually earning these like
yeah,
these different tokens from these different projects on top of the 5%. If it is that, even if it is like you either get the 5%, or like if there's no 5%, then you get these tokens. Then it's like yeah, but like it's a lot of clarification that still needs to be done. But thing is, it's still good. It's not where like a lot of these other projects are like they have staking, but like what is staking? You're depositing your tokens into my wallet. That that's pretty much it.
yeah. I
But
mean, if yeah, that's more or less it. Yeah, usually have to claim, but yeah,
but you get what I'm saying though.
yeah,
With playing like you is there's more things to it. So like it makes sense for them to like be, trying to take it slow and make sure that they when they have a full release, it's actually like working properly, and like the token isn't just down only. It's actually like accruing value over time as
yeah.
the
Right.
network overall grows. But yeah, speaking of like things growing, BlockFi is no longer growing.
I was
It's
just
going.
gonna say, speaking of things that are not growing.
But yeah, it just goes back to the same thing. Like, just don't trust these central money. All they're gonna do is go gamble it in someone like in other places. Maybe it is on chain, but like even that, it's like you're trusting their judgment of like them putting it in the safe bets, safe enough bets where like they'll get the return, and like there's not that much risk where there's potentially like there's a potential of losing the funds. Like there's too much risk associated with this. Like people just need to get educated on either trying to figure out better solutions. Maybe they actually go with like a centralized entity that offers proof of reserves and offers a way to like show like not just the assets but the liabilities, and also how the assets are being used, not just like we have X amount of this token and this token, but like, okay, what is this token doing? Is it staked? Is it doing this or that? Like just seeing how everything is like functioning within the treasury, like it would really give a lot of people peace of mind. But yeah, this is just gonna keep happening.
Yeah, for sure. And to add on to that, crypto in general gives people something that they really didn't have before, which is direct financial ownership of their funds.
Yep.
Right?
Right.
With traditional finance, you would hold your money in escrow with a bank. And everyone who is not currently in Generation Alpha remembers the 2008 crash
Yeah.
and the Lehman Brothers event and how that went down with fractional reserves. Um, but you do have to, with the benefit of being in complete control of your funds, you also have that responsibility of complete control over your funds. Meaning that if you send it to the wrong address, nobody can help you. There is an insurance on that. You can't get it back, right? You cannot have the same mindset of holding your money in a bank versus holding your money with crypto. Two
Yeah. No. No.
completely
True.
separate entities, right?
Yeah.
And you have things happening now, like with MetaMask, for example, logging people's IP addresses. And that's a step beyond what most people would consider safe, because what's to stop someone from breaching that kind of security or trying to log people's IP?
Exactly.
That's basically setting yourself up as a target if you have, enough money.
Yeah.
And that is something that you have to keep on the lookout for. Instead of having a Trezor wallet, or if you're holding it on a hot wallet like MetaMask, you might want to look towards getting that shifted to a different wallet provider that doesn't have that kind of overreach of security. And
Oh yeah,
yeah,
100%.
because you're going to see some things in the next couple of years, especially with crypto, where if anyone's a whale or if anyone has a certain amount of money, they become more of a target than anything. I mean, you have
Yeah,
accounts on Twitter like Whale Alert,
Yeah,
that'll instantly notify the entire general public of anything regarding a specific transaction from a specific address, and then I'll just post it from the ledger for everyone to view. And if you know someone
Right.
with that wallet address, you can put two and two together. So, yeah, you have to really look out for yourself out there. But with that added risk, again, there is that amount of freedom and security over your funds. You don't have to trust it with anyone else if you trust it with yourself. That kind
Yeah.
of financial sovereignty.
I think that comes kind of back to how easy custody solutions are, because what I felt
Yeah.
was good about MetaMask is that it offered a relatively simple way for anyone that was kind of willing to learn the basics to interact. It was definitely not perfect, but it was, I would say, it was easy enough,
Yeah.
But yeah, of course, now you also don't want to get your IP address linked to your MetaMask. So now we have to search for something else. What that is, I don't know yet. I know there are some people who are like pretty enthusiastically about mobile wallets, but that's honestly not for me. Like I would never do anything with crypto, or at least not like in any significant amount. I would never do on a phone, to be honest.
Mm.
Yeah.
Yeah, no, that doesn't seem the most secure to me. But yeah, we'll have to find another solution. For me personally, the most important part also about MetaMask was that it was fairly easy to link it with like a hardware wallet, whether you're using
Yeah.
Trezor or Ledger or maybe a different hardware wallet. That doesn't matter. Um, and yeah, now we'll have to search for something else. But going back on the sort of thing you mentioned of like banks versus self custody, right? I think I heard a very interesting story like a little while back from someone who's from Argentina originally, and she said like, yeah, because the peso, I believe they have there, is like falling so much, people would rather keep their money in USD, right? But then you're only allowed to get like $200 per month from the bank, and also the bank essentially charges you about double the price. So, or in another way to say it is like they only give you half the USD for your money, right?
Right.
So she said like, yeah, if you're booking a hotel, then basically, let's say the trip you're going on, where you're staying in the hotel, is like half a year out, then it's like you don't really know what the price is, and not because the price in pesos will change, but just because they won't even tell you the price, because they'll just make you pay the moment you're actually staying there, because they don't know how much it will change, so they can't really make any sort of future calculation. So it's like, yeah, how much was it, how much was the hotel? Yeah, I don't know. So yeah, I mean, I feel
Right.
like,
Traditional banks can't calculate risk. They just assume the maximum amount and then charge you it.
yeah, but it's sort of like that. Yeah, so the hotel will just make your reservation, and then they'll tell you the price when you're at the hotel. Because if they,
Bruh.
which is yeah, which is honestly, of course, very weird, right? Like you would assume they charge you now, and then they just convert the money to dollars if that's what they want to do. But that's
Hmm.
apparently not how it works. But I feel like if you're hearing a story like that, it's pretty easy, I think, for people in a situation like that to learn about self custody and to learn about a currency that cannot be inflated
Exactly.
to
Yeah.
infinity. Um, and I feel like now inflation is more of like on the public conscience, and of course, in like countries where the currency wasn't already that great, it's already been known for longer than just like the past year. But I think in at least here in Europe, and probably the same goes for America, I feel like if you would have asked, I don't know, let's say 5 years ago, the average person on the street who, or at least maybe below, let's say, the age of 25, I think if you would ask them, can you give me a definition of inflation? I'm not so sure they could give you like a good definition.
Definitely not. Definitely not. Yeah, yeah, it's so much things that like people are not aware of that like that affects other things that like just really compound to just become the worst situation possible for people.
Yeah,
And
yeah,
that's why a lot of people are just on the poverty line or under it, and like they can't seem to figure out how to just save up money and try to get out of their situation, is because there's lack of education. Like the education system, they don't really show us these things. They don't. It's not even like if they couldn't go to school. It's the fact that the school that they were going to wasn't really providing them the information necessary
yeah.
to be able to survive long term.
Yep.
So it's so much, so much. But yeah, this is a great way to end the stream. I mean, like it just shows people like I mean, look, you go to the bank, there's problems. You put your money you put your money in the bank, is problems. You put your money in a crypto bank like Blockfi, all these centralized exchanges is a problem. What's the real solution? That's self custody. And once more people start realizing that, then they start seeing like, okay, let me let me just self custody, and then people start realizing what else they can do with self custody, and that's interacting with all these on chain applications and being able to do so much more than just custodying their funds. So like once more people realize that, then yeah, we're gonna see a lot more serious builders on chain, and it's gonna be more of a focus on chain rather than off chain, and just like there's no point of raising money for anything that's built off chain unless it's necessary for anything on chain, you know.
Yeah,
Definitely.
agree.
All right, guys. We'll see you next week. Hopefully, it doesn't just completely collapse. In a week we're gone.
I
But
mean, if we're not
jeez,
doing a stream next week, then I think like
just pack it up. Just
Grayscale
pack
is
it up.
probably gonna sell like their 600,000 Bitcoin, and we're ending up somewhere around maybe 8K, which, to be fair, would be a stellar entry. Like if you're
Yeah,
still on the fence about buying, then that might be a good opportunity. Not as
yeah.
financial
Just
advice,
Yeah.
of course, but
yeah. Just if you're aware when you're watching this, just let us know, and then we will just not have the stream next week, just so you can have a buy-in. All
exactly,
right.
Yeah.
exactly.
All right, guys. We'll see you next.